what is remarkable is that from a game theory perspective, it kind of makes sense. It sounds like a very stupid move to undermine your own revenue stream, but in the long run, it could actually benefit the two countries. And actually, you could argue they're already reaping some benefits from the move when you look at what's happening in the U.S. and the kind of recognition that the OPEC group is getting from the industry and from political circles, the Texas Railroad Commission, as well as the government in Washington.
What do you see as the end game? What is this all in aid of?
So, when you think of OPEC, they like to say that their role is to stabilize prices, but this is really something very difficult to do because there's so many factors affecting the oil price that they can't possibly control. What they really do is, according to game theory and a model that was recently designed by a few leading mathematicians, including the inventors of mean field game theory, what they really do is balance two very conflicting objectives: the need for high prices per barrel to increase the revenue per barrel, and the need for a high market share. You can't have both, because when you increase the price, you encourage your competing fringe, the less efficient, higher cost producers that are then incentivized to produce more and to invest in production capacity. So you lose market share. So every now and then, as the market share of OPEC diminishes or the big players diminishes, then they go in the market and push the price off a cliff. Typically, they need a kind of shock to do that, a kind of extraneous, exogenous signal to get into this cliff mode. In the late 90s, the signal was the financial crisis in Asia. That was a demand shock. A few years ago in 2014, the last market crash, the signal was a supply side signal. It was the increase in production from the shale producers in the US. This time it's the coronavirus. But this time the signal is really unique in a sense, because the steepness of the demand destruction caused by the virus and the public health response is such that it really gives producers a shot at testing storage capacity limits and at really pushing the price down and getting rid of their less efficient, their more vulnerable competitors in a fairly final way.
Is one possible outcome here, though, an even more managed system, one that does encompass players that have so far exempted themselves, like the U.S. shale producers?
Yeah, so that's one of the other messages that game theory suggests, that once you're a very large producer and a comparatively efficient, economic, competitive producer like the U.S. has become today, you're de facto member of a club of large producers, and the other producers can really force you into consenting to production cuts, to share the burden of production cuts when those production cuts are needed by market conditions. And in a way, that's what we're seeing happen now. The increase in production, the move by the Saudis and the Russians to tear up the OPEC Plus agreement and increase production is really forcing the U.S. into consenting in production cuts before they become inevitable because of commercial failure. So, production cuts will happen anyway, whether it's because of economic reasons and bankruptcies and problems of that nature, or because the price goes too low, or they will happen because producers get organized and implement production cuts in a kind of concerted and organized fashion.